War is one of those events that shakes the world to its core, disrupting lives, economies, and the very fabric of society. It's a time of immense uncertainty and upheaval, and the financial markets right along with it. The stability we often take for granted vanishes, replaced by a landscape of volatility and risk. As investors, I know it's tempting to look for opportunity even in chaos. The urge to find a silver lining, a way to navigate the storm and potentially profit, is a natural one. So let's talk about the sectors and strategies that tend to outperform during wartime, exploring where potential gains might lie amidst the turmoil, while also keeping risk and ethics front of mind. It's crucial to balance the pursuit of returns with a clear understanding of the potential downsides and the moral implications of our investment choices. First up, defense contractors. These are the companies that design, manufacture, and supply military equipment and services. When conflicts escalate, governments spend more on military equipment. Defense budgets swell as nations seek to bolster their security and project power. Companies like Lockheed Martin, a global leader in aerospace, defense, and security technologies, Raytheon Technologies, specializing in weapons and military electronics, and General Dynamics, a major player in shipbuilding and combat systems, often see a direct boost to their bottom line. Increased government spending translates directly into increased revenue and profits for these companies. As demand for weapons, from small arms to sophisticated missile systems, ammunition, the essential consumables of warfare, and cutting-edge military tech skyrockets. The need for advanced surveillance, communication, and combat systems drives innovation and demand. These aren't just blips, short-term spikes in demand that quickly fade away. They're multi-billion-dollar contracts that can reshape earnings for years. These long-term agreements provide a degree of stability and predictability in an otherwise uncertain environment. Next, let's talk commodities. These are the raw materials and primary agricultural products that form the foundation of the global economy. War almost always disrupts supply chains. Trade routes are blocked, production facilities are damaged, and the flow of goods grinds to a halt. Suddenly, the price of oil, a critical energy source for transportation and industry, wheat, a staple food for billions of people around the world, or even rare metals, essential for manufacturing electronics and other high-tech products, can spike. Scarcity drives prices upward, creating opportunities for those who can access and trade these commodities. Commodity dealers who can handle this volatility, who possess the expertise and infrastructure to navigate these turbulent markets. Think of companies that trade, buying and selling commodities on global markets, transport, moving commodities from areas of surplus to areas of scarcity, or store essential goods, providing a buffer against supply disruptions, might find themselves sitting on significant profits. The ability to anticipate and respond to market fluctuations can be highly rewarding. But, and this is big, a crucial point to remember, these gains are often balanced by extreme price swings, sudden and unpredictable shifts in market sentiment, so it's not for the faint of heart. The risks are substantial, and losses can be just as rapid and significant as the potential gains. Now fast forward to what happens after the dust settles, when the fighting stops and the focus shifts to rebuilding and recovery. Reconstruction and infrastructure. The process of repairing and rebuilding damaged infrastructure is a massive undertaking. War zones need rebuilding. Homes, schools, hospitals, and businesses all require extensive repairs or complete reconstruction. And that means roads, to reconnect communities and facilitate the movement of goods and people. Bridges, essential for crossing rivers and valleys, utilities, including power grids, water systems, and communication networks. Entire cities sometimes require complete overhauls to restore basic services and create livable environments. If I'm looking at construction or engineering firms, companies with the expertise and resources to manage complex building projects, with a track record in large-scale projects, demonstrating their ability to deliver results under challenging conditions, this is where I see long-term potential. The demand for reconstruction services can last for years, providing sustained growth opportunities. The work is challenging, requiring innovative solutions and adaptability, but the contracts can be massive, representing significant revenue streams for the companies involved. Of course, for those who want to play it safe, who prefer a more conservative approach to investing, there are the classic safe haven assets. These are investments that tend to hold their value or even appreciate during times of uncertainty. Gold is the big one, the most well-known and widely recognized safe haven asset. It's been the go-to store of value, a reliable way to preserve wealth in uncertain times for centuries. Its intrinsic value and limited supply make it a hedge against inflation and economic instability. During conflict or economic crisis, when other investments may be losing value, gold prices tend to rise, as investors flock to its perceived safety. As investors search for stability, seeking to protect their capital from the ravages of market turmoil. Oil, on the other hand, is a bit more complicated. Its price is influenced by a complex interplay of factors. Prices can soar if supply lines are threatened, if geopolitical instability disrupts the flow of oil from key producing regions, but they're also vulnerable to sudden drops if demand weakens, or if new sources of supply come online. As demand fluctuates, influenced by economic conditions, technological advancements, and changing consumer behavior. Another area I can't overlook is technology. The tech sector plays an increasingly important role in modern society and warfare. Modern warfare is digital, relying heavily on technology for communication, intelligence gathering, and weapons systems, and companies providing cyber defense, protecting critical infrastructure and sensitive data from cyber attacks, drones, unmanned aerial vehicles used for surveillance, reconnaissance, and targeted strikes, and surveillance systems providing real-time monitoring and intelligence gathering capabilities are more relevant than ever. The demand for these technologies is likely to increase during times of conflict. This sector is not just about hardware, the physical components of technology systems, but also the software that powers everything behind the scenes. The algorithms, operating systems, and applications that make these systems function. But here's the thing, a critical point to keep in mind. Investing during wartime is never simple. It's a complex and multifaceted undertaking. Risks multiply, the potential for unexpected events and negative outcomes increases significantly. Markets can swing wildly, reacting to news events and geopolitical developments with extreme volatility, and unforeseen events can wipe out gains overnight. Geopolitical shocks, policy changes, or unexpected military outcomes can trigger rapid market corrections. And there's the ethical question, a moral consideration that cannot be ignored. Am I comfortable investing in sectors that profit from conflict? Is it morally acceptable to benefit financially from human suffering? Only you can answer that. It's a deeply personal decision that must align with your own values and moral compass. Diversification is key. Spreading your investments across a range of asset classes and sectors is essential for managing risk. By spreading exposure across different sectors, including those that may be less directly impacted by conflict, I can soften the blow when the unexpected happens. Diversification helps to mitigate losses and protect your overall portfolio. And as always, it's crucial to keep a long-term perspective. Avoid getting caught up in short-term market fluctuations and focus on your long-term financial goals. Short-term wins are tempting, the allure of quick profits can be strong, but the real value comes from understanding the broader impact, taking a holistic view of the situation on economies, societies, and lives. Consider the long-term consequences of your investment decisions, not just the immediate financial returns. So, if you're considering investing during wartime, a time of heightened risk and uncertainty, do your homework, conduct thorough research and analysis before making any investment decisions. Weigh the risks, carefully assess the potential downsides and the likelihood of negative outcomes, and never lose sight of the bigger picture. Remember the human cost of conflict and the importance of ethical considerations.